Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equities set to rally for sixth straight week this time around, set for its best weekly run since 2020. That's almost 3 years. RBI MPC outcome is expected to be more or less a non-event for the markets. Well, if you talk about the FII and the DII data, FII continue to be the sellers for the second consecutive day and they've offloaded shares worth around 1,564 crore, and DIIs too have sold equities but only to a minuscule amount of less than 10 odd crore. Talk about global cues, well, they remain mixed at this point of time. Market is expected to likely consolidate further in today's trading session. Overnight, however, you saw US markets ending in higher. GIFT Nifty indicates a flat start coming in, trades around that 21,000 odd level. Well, Nasdaq closed in at least 1% higher and S&P 500 snapped in 3-day losing streak. Talk about in detail what really led to the sharp surge was the Alphabet and Advanced Micro Devices, that is AMD shares typically rallying on fresh optimism about artificial intelligence. Asian shares rise at open on Friday as bond yields, interest rate expectation, oil price and inflationary pressures around the world are falling, and the conviction behind this broad-based move now appears to be strengthening. Well, if you just summarize the whole week, Nifty has, in the previous session snapped in that 7-session gaining streak, of course, and set in for the best weekly run that we've seen in 3 years now, and clocking in the 6th best week or a gain for the 6th consecutive week. Talk about mid-cap index that's advanced for 25 session, which is the longest streak in at least 8 years. Talk about Bank Nifty, it's paused but still remains to be on track to see the best week in over a year. So that's typically the data that we have for the week. But talk about FNOQs. Well, FIIs continue to be the net buyers in index futures. They've also bought in Bank Nifty futures. Well, they continue to be sellers across the option segment and also stock futures put together. Now, if you talk about the FNO ban, what is new to the ban is Balrampur Chini and National Aluminium Company. I'll take a moment here to explain. Balrampur Chini has been witnessing some amount of correction for the last 7 to 8 trading sessions. In fact, most of the sugar stocks have. So this now continues to be, it is new in the ban. What still now remains in the ban is Indiabulls Housing Finance, Delta Corp, India Cements, Z Limited and SAIL. Talk about option Qs or Nifty put call ratio. Well, that's come in a little higher, which means that there are more active puts as compared to that of calls, and now that ratio has increased to 1.34 versus 1.18. Today is that RBI monetary policy. What do we really expect? Well, RBI Monetary Policy Committee decision on key interest rate is expected to be the latest review, or let's just say the last review before the budget presented for the financial year 2024-25. Now, economists expect MPC to maintain in that the status quo at a time when concerns over high interest rates impacting economic growth have tapered, with the second quarter GDP growth number coming in at a solid 7.6%. Having said that, concerns over core inflation has eased and the volatility in food prices, however, is expected to weigh on MPC's decision put together. But that's all that we have in terms of the RBI monetary expectation, of course. But let's get going with the strategies, levels and top recommendations of the day with Aamar Singh, who is the Senior Vice President at Angelone. Morning there, Aamar.
Yeah, very good morning.
Okay, do you expect RBI monetary policy to essentially have an impact on the market, at least what the charts are suggesting at this point of time, and what is the strategy that one needs to take care on, and also the levels that one could look at through the course of the day?
Yeah, so markets more or less have factored in that the status quo is going to be maintained. So I think that is definitely markets have factored in. That's the reason we are seeing some sort of consolidation in the markets. But yes, the statement of RBI as to how it would be going forward with regard to interest rates or overall the concerns with regard to inflation, those are some interesting and important key points which the markets would definitely watch out for. And having said that, what we saw is that India VIX has also cooled off. yesterday, because earlier for the last couple of days it was trading close to the 14 mark. It's come down around 12.67. So that tells me that markets are not overly concerned with regard to any unexpected development from the RBI policy. So markets are reflecting that. As far as the levels for Nifty is concerned, I would say Nifty's got now, it's in a very strong uptrend. So any pullback should be used as a buying opportunity across different time frames. We've seen strong, I would say, bullish momentum. However, yesterday we saw a short build-up happening there. So that's something that's but normal in the market. So the trend definitely is up. As far as the levels are concerned, Nifty's now got very strong support coming around the 20,750, 770 zone. That's a strong zone of support, whereas on the upside resistance is around the 21,000, 21,020 mark, which is I would say within striking distance. And given the trend and the momentum and the overall breadth of the market, because that's something which is very important. Earlier we were seeing small cap, mid cap, large caps not participating. Now we are seeing the large caps, the likes of HDFC Bank and ICICI Bank. Axis earlier was moving significantly. Reliance has also started to participate. So these are some positive signs which shows that there is more upside room to the market.
All right. Talk about Bank Nifty. Essentially, Macquarie has come up with a report, couple of them actually, on Axis Bank, SBI, HDFC Bank. Thus far, it's also seen like private sector banks have been participating in the rally. Strategy for Bank Nifty and the levels, Aamar.
Yeah, I would say again, if I look at Bank Nifty, again, Bank Nifty is a buy on any dip. The levels to watch out for Bank Nifty, somewhere support is very crucial around the 46,350, 46,400, 450 level. That's a very crucial. So today there could be volatility in the market. So if one gets an opportunity around those levels, that can be a very good level for a buying opportunity. Whereas on the upside, resistance is around the 47,150, 47,200 mark. One should trade Bank Nifty from the long side.
All right. One should also watch out for Inox and Suzlon. Government has issued in wind repowering policy. The opportunity is to an extent of 25 gigawatt potential. Old wind farms with low rating turbines to replace in the new high rating turbines. But coming on this one, Aamar, what do you like between Inox and Suzlon, and what's your top recommendation for the day?
I would say that Inox would be the one I would look at, because if I look at the stock has really delivered well. If for this quarter, it's up by almost 84%, and the trend is very strong in place. And also with the renewable energy thrust, this is one stock one can look at. The stock has over the last week or this current week, it's up by almost 24%. So any pullback in this stock can be used as a buying opportunity. The levels to watch out for is around 325, 330. Currently, it's around 356 odd levels. And if you go back in time, the stock at one point of time used to trade as high as almost 500 levels. So somewhere around 480 levels. So there is still more upside to the stock. And technically, the stock continues to be very strong across different time frames.
Sure, that's the word coming in. We've spoken about Inox, Wind, and of course Suzlon also. But I'm going to chat with Aamar about sugar stocks in just a bit. They've been quite in the correction mode for past couple of days after government had decided to come in directing the supply of the sugar mills to that of ethanol. So that continues to be in focus and on our list this morning. Nifty 50, well, it is a good start coming in for the markets. We are looking at gains to an extent of 0.2% thereabouts. 20,945 mark. We've got on to a good start for the markets. Clearly, bulls seem to be back on the Lal Street after a session of breather out there. Let's talk about Bank Nifty just to see how's the momentum stacking up ahead of the RBI monetary policy neat outcome. Of course, the meeting started at December 6th, and today is going to be when the outcome was being out. Status quo stance is expected to be, is expected, and it's expected to be a non-event of sorts. But any surprise here on would actually dictate the trend of the markets going forward. 0.1% of gains locked in by Bank Nifty as well. Mid-cap and the small-cap gainers, just to see where the momentum has been for mid-cap index. Well, typically 0.5% of gains coming in for the mid-cap. There's a bit of outperformance there, and small-cap at this point of time also is showing some amount of outperformance there as compared to the larger counterparts. In terms of what we have in sectoral indices, the PSU banks and the metal sector along with IT. These are three names essentially that we'd like to watch out for. Well, IT is doing well, 0.3% clocked in early deals for that one. And PSU Bank too seem to be in fine metal this morning. Metal for that matter also, it is a bit of outperformance there, continues to shine. Well, working in the favor of the market. Let's talk about the top gainers and the top losers that we have, just to see where the trend is essentially shaping up. Adani Ports, Adani Enterprises, NTPC, these continues to be the top gainers that we have on the list right now. M&M, UPL and JSW Steel. So it's a mix of the names out there. Auto, you have essentially metals, you have Adani Company, you have NTPC. So it's a mixed bag of sorts, no particular trend per se which is shaping up. Of course, Adani group of companies, it's been an excellent run for them for the entire week. Talk about the top losers that we have this morning. Market seems to be, the market breadth at least seems to be pretty much in the favor of advances right now, and remains to be seen if there is some amount of sell-off which is coming. ICICI Bank, DRL, Bharti Airtel, well, these are some of the top losers that we have. So it's ICICI Bank essentially just topping the list right now. That's that when it comes to the top losers. Essentially, market breadth in the favor of advances, 42 versus 8 declines, and ICICI Bank is also the one which is at the top of the list, perhaps exerting some amount of, let's just say, limiting the gains of the markets. Aamar, come in on this one, please. Let us know, what do you make out of something like an ICICI Bank? Balrampur Chini, of course, is an F&O ban, but in the sugar stock, what do you like after the recent correction that we've seen?
I would say first talking about ICICI Bank. ICICI Bank seems to be unable to breach the levels of 1,000, 1,020 odd levels, because that's a double top formation. And the stock, if you look at in July, it had made those levels, and from there it had bounced back. So there was a correction and then there's a bounce back, but it's unable to breach that level. So that's going to act as a zone of resistance for ICICI Bank. The level to watch out for is 1,020, 1,025 for ICICI Bank. Talking about sugar stocks, yeah, you're right that sugar stocks, we've seen some very sharp correction in the sugar stocks. And if I look at sugar stocks, I would rather wait for some further consolidation, because we saw a very sharp up move and then there's a sharp sell-off which is happening. So rather I would wait for consolidation before getting into any sugar stock at the levels.
All right, so that's a bit of caution there. Do bear in mind the fact that Balrampur Chini is also entered into the F&O ban. Aamar, anything that looks interesting at this point of time? Also, ICICI Bank has been the top loser today. How are you looking at that as well?
Yeah, I would say ICICI Bank, overall the trend remains positive, but on the long-term charts, medium-term charts, there's some sort of consolidation. So I would rather wait for ICICI to reach the 1,020, 1,025 level. It's not very far off from there. It's roughly around 2%. Then only it would further resume the upside. As far as other stocks are concerned, which are of interest, Tata Motors is one stock which continues to perform exceedingly well, and the stock is trading higher even as we speak. And on the charts, technically on the long term as well as the short term charts, the momentum continues to remain extremely strong and positive. So any pullback in this stock can be used as a buying opportunity. So somewhere around 700, and it's currently on 723, 24. So any pullback towards 710, 715, that can be used as a buying opportunity with a stop loss below 695 and a target of 735 on the upside. And the other stock one can look at is IOC. This is one stock, again, a very sharp up move that we have witnessed, and it's in a very strong upside trajectory. And the momentum is very strong. So at current levels, or maybe 1% down, one can look at buying the stock with a stop loss of 113 and a target of 135 in the short term.
All right, Aamar. Clearly, the trend seems to be shaping up, at least now. Wipro, HCL Tech seem to be leading the gains thus far. There has not been a very active participation coming in from the IT counters, and looks like the rally has just started even for the IT names. What do you make out of it? What do you like between Wipro and HCL Tech, or for that matter, any other stock within the basket?
I would say Wipro, if I look at Wipro definitely seems to have bottomed out, and it's gaining momentum on the daily charts. But what's happening in Wipro is that Wipro's got very strong stiff resistance coming around the 440, 450 level, because that's a zone of resistance. Once that is taken out, then we could expect some sharp rally. But here from the current levels also, that's almost 6-7%. So the upside potential for Wipro from the current levels is around 440, 450 levels. And talking about the other stock which you mentioned, HCL Tech. So HCL Tech is in a, I would say, different trajectory altogether as compared to Wipro. But what is happening in HCL Tech is on the daily chart, there is a loss of momentum and the stock is indicating consolidation. So Wipro would be a better pick from a short-term trading perspective.
All right, Aamar, we're just going to leave it at that. And thank you so much for taking out this time and having the conversation with us.
Thank you.
All right, we need to cover a lot of ground ahead of the RBI policy meet, right? In terms of the sector that look interesting here on. Sure, bulls took a breather, but look that they're back in action in today's session. And also, let's not forget, it's a Friday special opening bell, and we have a special guest waiting for us, Rahul Arora, who's the CEO of Nirmal Bank, joins us early this morning. Thank you, Rahul, for taking out the time and joining us early this morning. Let's start off of your assessment, typically of the markets, a bit of breather by the bulls in the previous session. Again, they seem to be back in action. The markets is set to rally for the 6th straight week and perhaps clocking in the best weekly gains that we've seen in almost 3 years. What's the trajectory going forward?
Good morning, Nickey. Thank you for having me on your show. So obviously, I think there are a few things in the last 10 or 15 days that have gone right for India. I think the fact that crude has settled into a very comfortable band of 75 to 80, a very strong core sector number at 12%, a very strong GDP print at 7.6%. And then, of course, the election outcomes that you saw in the state elections, where you had the center party sort of taking away the Hindi heartland, which is probably now has the market discounting that they'll probably return back in 2024. So I think a combination of a lot of these events and the fact that your rupee has been relatively stable for a very long time has resulted in this move. I think the FIIs have participated as well, which is a very good thing to see. I think just around the election results, I remember on one day they did almost $1 billion in cash buying. So all things considered, not really surprised to see the markets where they are. Are valuations in some pockets looking a little ahead of themselves? For sure they are. But at an aggregate level, I think if you had told me 15 days back that these would be the things that we had to contend with and 21,000 would be where the Nifty would be settling at, I'd pretty much take it with both hands. I still think that there is a potential for this up move to continue even a little bit further. But like I said, with a little euphoria, a little bit of caution is always warranted. So I think if you've made good money in certain pockets, you can certainly look at taking some profits off.
Sure. Rahul, despite the kind of, buying that we've seen from FIIs, they still continue to be at that decadal low level in the stock markets, right? Even after the month of November being a fairly decent one for FIIs, the trend still remains subdued from FIIs. What do you think could be the next big trigger for the markets, which could essentially move the markets higher? The next big number that you're looking at, and how are you also viewing in, what are your expectations from RBI policy meet?
So I think, Nickey, if you look at the domestic macros as they stand, and I spoke about the external sector as well, India obviously is a beacon of shining light in the global emerging market space right now. I think the only market that we're probably going to compete with capital for in 2024 is going to be the United States, because if you see the last GDP print that's come out of the US, they're also growing at about 5% annualized, which is remarkable at that pace of GDP. And the US economy is just on full steam. I think every data point that's coming out of there is quite remarkable at these interest rates and at these mortgage levels. So I'm not too perturbed with the fact that, there is obviously been a reasonable amount of FI outflow. But I think now that you've had these election results and some amount of policy certainty, that's going to be in the works, I think there is a very good chance that they will return. Earnings, by and large, Nickey, for the financial year have not disappointed so far. Yes, there have been a few downgrades here or there. But, same time last year, I think, Nickey, we were talking about a US recession and what would happen to the world if we went into a slowdown. None of that has played out. So in that backdrop, I think earnings have certainly outperformed. So I'm not too perturbed. I think the DIs are doing a good job. And the domestic mutual fund market already is about 45 lakh crores. So the FIs will come, and I'm not too worried about that. To the second part of your question on what we expect the Reserve Bank of India to do, I think the GDP print and the core sector print is going to sort of give the RBI some breathing room. I think our own economist, Teresa, expects that it's going to be a status quo policy. we don't see any more rate hikes happening in the Indian market. So also for the US market. That's not to say, Nickey, that we're expecting a rate cut. I just want to put that on the record. I don't think we're expecting a rate cut till the first half of the next calendar year. So somewhere around May, June, July is when we are potentially looking at the first rate cut, because inflation is still hovering at those 5-6% kind of levels. So for today, I think the RBI will probably stay put. They may make another mention of the OMOs like they did last time. But I think the way things are, and once the markets start factoring in rate cuts as 2024 wears on, I think the yields may probably inch closer to 7%.
Rahul, no hint of hawkish tone, do you think, will aid the resumption of a bank Nifty rally? Essentially, private sector banks, which thus far have just started beginning to show some signs of recovery. You think no hawkish tone in the RBI monetary policy meet also will give that required impetus for private sector banks at least?
So I don't think that will have a major bearing, Nickey, to be very honest, because, much like the government of India, the obsession with the budget has reduced to such a large extent because they're constantly doing things through the year. It's so also with the Reserve Bank of India. You just saw that they increased the risk weightage just a couple of weeks back by 25%, percentage points on retail lending in some pockets. So I think this is probably something that's going to continue. I think what's going to drive the bank Nifty higher, Nickey, is going to be when the market gets enough confidence that net interest margins have bottomed out. And I think that will probably happen a quarter or two down, where I think this pressure on NIMs will probably ease. You may start seeing it in the next quarter's results in some banks because they probably have some pricing power. But obviously, with this increase in risk weight, that will probably delay it by a quarter. By and large, asset quality has been stable. I think in some public sector banks, there's still room for improvement. And some of the mid and small private sector banks, there is. But on an aggregate, I think when we started this particular fiscal year, people were talking about credit growth being around that 11, 12, 13% kind of number. It's been between 14 to 16%, which is actually quite decent. To a large extent, obviously, credit growth is higher than deposit growth, and that is no rocket science on why that has happened. But I think given the fact that, this is the largest weighted sector in the market, the moment you get one or two visible signs along the lines of what I was talking about, I think flows will certainly come back. You can't have the Nifty go to 25,000 without the bank Nifty participating because, the way the Indian market is structured, Nickey, if you look at the banks, Reliance, IT and FMCG, that's almost 70-75% of your market right there. So I'm still hopeful. I still think there is enough and more value in banks. And I don't think, unless something very majorly hawkish comes through in the policy today, which I don't anticipate, I still think Bank Nifty is a good place to be buying into.
Rahul, before I move on to the conversation of chemical sector, which of course is the big theme that Nirmal Bhang is looking at. But before that, just focusing on banks, private sector argument versus PSU. Now it's a dated argument. We've seen significant outperformance coming in by the PSU banks. But even if you look at the valuations in terms of price to book value historically, they still trade at a discount versus the private sector banks, which still haven't really performed into the rally. Which of the two do you really like in the pecking order of stocks?
Nickey, if we had this conversation around the time when corporate asset quality was going through the roof, you had issues around Reliant Com, JP Associates, the Malias, etc. I could understand, but I think it's one of life's biggest mysteries to me as to why that valuation gap exists even today. And I'll just give you a one-line statement, which to me sort of sums it up. State Bank of India, the largest bank in the country, is coming to you at what, about 17, 18, 19% return on equity. And it's coming to you at about 1.1 times price to book. For the life of me, I don't understand why an ICICI bank should be trading at 2x the multiple that a State Bank of India does. Like I said, it's one of life's greatest mysteries. I hope that corrects itself because I think the way SBI has gone about cleaning up its books, the asset quality, the kind of credit growth they've shown. Obviously, there have been issues in some public sector banks, but not to that level where you derate them to that extent. Obviously, there's been an odd issue with Bob that has happened in the recent past, but then you can also say that there have been issues that have happened with private sector. Where is there more value between the two? Without a shadow of doubt, Nickey, public sector. I would still say I think money can be made in names like SBI and Bob. But even on the private sector side, I think if you look at names like, say, an IndusInd Bank, there is enough and more value. ICICI Bank has gone through a reasonable amount of time correction. that's also something that I think presents good opportunity. So I think we'd probably stay away from some of the other private sector banks just for now because the tilt is more towards PSUs. But these are some 4 or 5 large cap names that are coming to mind that we still like at this price point.
Yeah, and also to add to the anecdote that you've given, State Bank of India is perhaps the only underperformer on YTD basis when it comes to PSU banks. So clearly that valuation is justified. Also, let's talk about the interesting theme that you were talking about, that the chemical sector, there is a brilliant report written on account of that. There was an outperformance that we saw from FY19 to 22. You expect the theme essentially to revive again. What are the fundamentals behind it, and which are 3 stocks that you like within the basket?
So, Nickey, I think we need to view chemicals in 3 specific periods. I think the first period was when COVID started. And this entire issue of China plus one came into being, and people thought that capacities would shift from China to India, and India would become the preferred destination for chemicals, both specialty chemical, the intermediaries as well as the ingredients. What happened after that? I think the trade was so concentrated, Nickey, that valuations started going excessive. I think most chemical companies in India went up to valuations of 40, 45, even 50 times 1 year forward. Then came the second period where you had a very reasonable time and price correction. And I think that period's probably lasted a little over 2 years, if I'm not mistaken, where there has not been any major outperformance of these stocks. And now is the third period where the market's a bit conflicted with this entire issue of inventory and destocking. Our own view, and my analyst Abhishek believes that this destocking phenomena that has been spoken about, or excessive inventory or dumping or whatever you want to call it, may persist for another couple of quarters. But then you don't buy companies for the next 1 or 2 quarters. I think there are enough and more companies in the chemical space in India, and you can probably add agrochemicals that are doing a lot of capital expenditure in value-added products, in very novel molecules, in very sort of high revenue-generating molecules. When you talk about pharma, when you talk about drugs like Revlimid, etc., those similar kind of opportunities in Indian chemicals. So we are very bullish, I think, on case-to-case basis. I'm not making a blanket statement here. Like I said, not everyone's into these novel drugs or novel molecules or value-added products. But I think if you look at the fluorination space, we do think there is value in Navin Fluorine. There is a management change underway. We understand that. And maybe at this price point of 5-10% lower, even something like an SRF, but even something like a Fine Organics or a Neogen is something that we like. Most of these companies, like I said, I think there's been a good valuation reset. Obviously, SRF's valuations, you probably have to keep the technical textiles business aside if you want to do a like-to-like comparison with Naveen. But even there, I don't think it's looking too stretched right now. So we're fairly confident that these 3-4 names that I've taken could probably compound their earnings by north of 20% with the kind of return ratios that they have, which are going anywhere between, say, 18-20% to about 25% on return on equity and capital employed. We'd be relative buyers, and we wouldn't probably want to excessively get too pessimistic about this entire issue of destocking that the market's talking about.
Rahul, we're just going to leave it at that, completely running out of time. But thank you so much for that perspective and interesting take. It was great chatting with you.
Always a pleasure, Nickey. Thank you for having me.
Right, pleasure is all ours, like I always say. But let me mark IIFL Securities. That particular stock is doing extremely well. 8% uptick there. SAT has set aside SEBI's order dated June 19, 2023. The order prohibited IIFL Securities from onboarding new clients for 2 years as a stockbroker. So SAT has now set aside that SEBI order. The penalty imposed also has been reduced to around 20 lakh. On back of this development, you're seeing IIFL Securities doing extremely well in trade. The stock is right now up with gains of more than 8%. But with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for the rest of the page, stay tuned into moneycontrol.com and Moneycontrol app.